Hey, welcome to WTF Mortgage. This is the mortgage interest rate update for February 8th, 2024, brought to you by yours truly. Let's jump right into it. So you see these rates over here? See this? This goes from 5.25 or 5.25 on up to 7.375. These are all of the available rates that every lender, every bank, every brokerage, every credit union has access to, and they actually could go a little bit lower than this and even a little bit higher than this, but in general, this is the band of available rates. Now, you won't see all of these rates advertised because, as you have probably seen, lenders, banks, credit unions, whatnot, they will advertise typically only one of these rates. Only a handful of companies that might advertise multiple rates, like I commonly do that with my company. On this end, the reason why you won't see these rates on the lower end is because, well, they're expensive. Not saying they're not worth it, but it's too expensive for most consumers. Like on this end here at 5.25, depending on the company you go to, this is going to cost 25 to 30 something $1,000. Now on this other end of the spectrum down here at the 7.375, this would have no points and no cost and possibly even a lender credit going to you. But you're not going to be interested because the rate is too high. So you're going to see that the lenders, you'll notice this after this video, as you go look around, you're going to notice the lenders advertise in this range here. Right now they're advertising in this range here, about 6.25 to a 6 7/8 or 6.875. Oh, sorry, I'll remember to refer to it in the decimal form, 6.875. You're going to see it in this range here. I call this range the Goldilocks interest rate zone here. And I call it that because this zone here, these are the rates that are, say, 1 point, a half point, no points, no points and no fees, no points and no fees with the lender credit going to you in this range. So those type of rates are usually the ones that sell the most. The consumers are more apt to purchase into these rates, this in this Goldilocks zone here. Now, obviously, as the interest rate pricing goes up and goes down, this Goldilocks zone is going to change. So when you go out there on the internet, you're going to see most of the lenders advertising in this range here. Now, you probably will see a few places advertising in this range here. I actually was online checking it out myself, and I saw some people advertised at 5.75 and 5.875 for their 30-year fixed rates. Now, these are very special companies, with the ones that you see advertising right now between 5.7 and 5.9. These are special companies are actually called assholes. And the reason why is because they're just baiting you in. There's nothing wrong with cost. In fact, paying a little cost usually saves more money in the long run, depending on how long you're going to stay in the home. Well, it definitely saves you more money depending on how long you're going to stay in the home. So costs are not bad, but when a-holes like companies that are advertising here make the consumers or the shoppers believe that that's maybe the 0 points rate or the rate with only a couple $1,000s cost, then that's when they're a-holes. So careful when you see those out there right now. What you see highlighted here, this is the 0 points and 0 cost rate right now. And let me clarify, that's a 0.0 cost rate with my company. Now, this does not constitute an advertisement in any way, but I have to use something as a baseline. The reason why is because, well, I know what my fees are exactly. And of course, most places are a little guarded on their fees. They do that for competitive purposes because they're trying to get your business. So I know my fees. What I also know is that I'm going to be very close to everyone else out there. So you're going to see some places that are pretty much the same as me. You're going to see some places definitely higher than me, and then you're going to see a few places lower than me. But in general, what I'm trying to get across is that if you know my pricing, you pretty much know everyone else's pricing, and that goes the same with every other bank, lender, brokerage out there. We're not that far off from each other. Certainly, yes, there'll be these days when my costs are several $1,000s cheaper than another company, and another day where they're only a couple $100 cheaper or the same. And, it varies depending on how we're pricing the market out. So this is the no cost rate. What you see right here, this is the rate with just under a half point. 6.375 30-year fixed, 3,119 in cost. So what I'm going to do on these future updates, I'm going to always show the fees, and I'm going to use certain rates as a point of reference. For example, yesterday, this 6.375, the points cost were $3,700 and something dollars, and now the next day, $3,100. You get fluctuations like that in a market like this. You're going to see this constantly going up and down by a couple $100 to sometimes a big move like this, close to $600 move. But what I'm not going to do is I'm not going to do these every day, because A, you'll get sick of seeing me, and B, the large moves don't occur on a daily basis typically. It might take a week and a half or so, even 2 weeks to make a large move. And so I don't want to bore you to death with all these little moves, because while it jumped almost $600 or dropped almost $600 down but last night, it could go back up $500 tomorrow. So I'm not going to bore you with all the tiny moves in between. So what you see down here, I wanted to let you know what these rates are based on. Now, in an advertising situation, we must put these in here in the form of what we call disclosures. 99% of the places will list these as disclosures. Sometimes you'll see they'll use the term disclaimers, but disclosures, that's the term that most of us use. Now, we have to show you these disclosures by law. That's in accordance with the Truth in Lending Act, and that's on the federal side. So I'm bringing this up. Mostly I put this here so you could be cognizant when you're out there shopping. When you see an interest rate advertised online, don't just get happy and then think, hey, you can get that. You need to click on the disclosures tab. Now, they're going to have that little word disclosures somewhere in the vicinity of where they're showing the rate. They have to have it somewhere nearby. Some places are a little what I would consider deceptive. They put it off to the side in tiny little print where you can barely see it, or they put it far below where you have to scroll down. What they should do is put it right there, like on mine, I have it right there smack dab where you can't miss them. And so you need to reference those disclosures. The reason why is because they'll show you the factors that the pricing is based on. And you can see right here, you've probably already glanced at it. It tells you the type of loan, the type of credit that's necessary to get the rate at that price, the type of loan amount, and the value. In other words, if you have a 680 credit score, you can still get this 6.375 rate, but your costs are not going to be $3,119. Your costs are going to be higher. Same thing if your loan amount, if you have a $150,000 loan amount instead of $400,000, your costs are going to be different. If your value is, say, $570,000 instead of $670,000, your pricing is going to be different. So be aware of that. Be cognizant of that. Don't just look at the interest rate. Check out the disclosures. Now, one more thing I want to add, and then I'm going to close up with talking about why this Freddie Mac is over here. So one more thing I want to add is that I've been doing rate updates like this for almost 2 years on different channels. But on the other updates, I would show people the rates and the APRs, and I explain to them how the APR is a reflection of fees added into the loan and how they can use the APR to shop. Got a little too confusing for many people. So what I'm going to do now, and let me know if you like this way better, is I'm going to reference the fees always. The fees, how much it cost. Why? Is because I'm going to create a playlist. So you can go back and look at the previous days and see, just like I told you, the 6.375 was $3,700 yesterday, and you'll be able to see that's like, hey, I see the 6.375 is now 0 points. 4 weeks ago it was $3,100. Whatever it is, you'll be able to actually see that dropping, and that's how you want to look at it. What you're really shopping for are the fees, not the interest rates. And I know even some of you experienced homeowners, when you were shopping around, you called some places, and what did you do? Did you go, hey, what is your rate? Or if you're talking to a friend or something, you say, hey, what's the 30-year rate right now? There is no 30-year rate per se. There is no national interest rate. And so you gotta, if you subscribe or watch my videos, I'm going to get you accustomed to shopping for the fees. Yeah, that's a marketing trick that lenders, banks, credit unions, all these places use. Every single damn one of them. I've been doing this 26 years, and every company has done this. They do that because they know people are shopping for that. But in reality, we all have the same interest rates. Surprise, surprise, surprise. Yes, the hell we do. There is no exception to that. Anybody tells you different, they're either lying or they don't know what the hell they're talking about. We all have the same interest rates. Every single bank, lender, brokerage, credit union out there. The difference is what we charge for those interest rates. My 6.375 is going to cost different from Quicken's 3.75. It's going to cost different from Loan Depot's 3.75. It's going to cost different from Bank of America's 3.75. You get the point. So you're really shopping for the fees. A better question than calling up a lender and asking, what is your rate? Is, hey, how much does your 6.375 30-year fixed rate cost? Let's go ahead, and I want to move on so this video doesn't get too long, because in the future these videos are going to be pretty quick, only a few minutes to do the update, but I'm giving you some background information on this video, and I'm going to give background information on like the first 5 or so of these videos, because this is the first time on this channel I've posted videos like this. So I've got to give a little background information to let you know how this works here. So again, that last bullet point was you're shopping for the fees, not the interest rate, because we all have the same interest rates. All right, and let's go ahead and move over, close up with this, what this Freddie Mac is. So you see here this Freddie Mac 6.63. This figure is from the Freddie Mac, I still call it the primary market survey, but it doesn't exactly work like that anymore. So I'll explain. Since 1971, Freddie Mac has been surveying lenders. They started doing this in 71, and they would survey participating lenders all across the country, and the lenders would give them data on what type of rates customers got from them and how much those rates cost. Freddie Mac would then take that, compile it, and post it on their website weekly, so you could see what the average interest rates that consumers across the country with these participating lenders are getting, and the average points that they're paying for those rates. Freddie Mac is still doing that, and they still post it weekly. You can go on Freddie Mac's site and look it up right now, and you'll see that 6.63 for the week. I think they do it every Thursday. It is. Wait a minute, today's Thursday, so they might be updating this. So I haven't checked, but as of last night, I pulled that up there, so they might be changing it. It might change today. Anyway, now Freddie Mac gets this from automated information. So Freddie Mac is actually an investor, just like Fannie Mae. They're not a regulator, and Freddie Mac buys loans from us. They do what we call providing liquidity for the primary market. Anyway, so they buy these loans, but before they buy these loans, these loans have to be first approved in their system. So they have this automated system where lenders are submitting thousands of loans all from all across the country. And these loans go into Freddie Mac's approval system. And so Freddie Mac is now taking the data from their approval system and creating that average and posting it on their website. It's a much more efficient way to do it, and you get a much larger sample of lenders in there, so you can get a better idea of what the average is. Now, the reason why I'm showing you this is because this, in 99% of the cases, well, maybe 99.9% of the cases, this Freddie Mac rate, that's what the I'm sorry, not lenders, but the news networks are reporting, whether it be the regular news or your favorite financial news network. When you hear them say something like, well, the 30-year mortgage rate has dipped below 7%. What they're really telling you is what the Freddie Mac average is. I guess maybe they have staffers there, and the staffers feed them this information, and maybe they don't know any better what they're really quoting. So that's not like, there's no national 30-year fixed rate. When they say that, I know it confuses the hell out of millions of people when they're watching that on the news. So anyway, so that's what that is. So when you see that, your favorite news people on TV saying that, that's where they're getting it from 99% of the time. So be cognizant of that, okay? All right, so this one was much longer than the if you stayed in for this long, there's probably a good portion of you that zoned out somewhere after the first minute minute or so. So if you were brave enough to stay in there this long, just keep in mind the future ones are going to be quicker and to the point. But I've got to, indoctrinate everyone to the how this works, or you're not going to get the what you should out of it. So that's why this one was much longer than the future ones are going to be. Throw some comments in there on if you have any ideas on how I can communicate these interest rates and what's going on in the interest rate mortgage market to you better. If you want to see something a little bit different, let me know, because that's what I've been doing over the past 2 years, is kind of tailoring this to make it easier for everyone to kind of digest what's going on. All right, so thanks so much, and I will see you on the next one.